welcome to the episode of the Income Flip with Beau Turner. Beau, thank you so much for joining us, man. I appreciate it.
Thank you for having me, Rob. Really excited for this.
All the way from Oregon. Beautiful place. Beautiful place. Well, Beau, as is customary with people that are on the Income Flip, I love to understand and unpack the journey of the entrepreneur. As I was deep diving on your background, I see you have a heavy real estate investment background. And it looks like over the last couple of years, you've made some pivots with your wife, and I really kind of want to understand that. But let's go back in time. Like, what got you into this wonderful world of real estate in the first place?
Yeah, so I started out with real estate being a very active strategy within the family. So it was never a full-time income for members of my family, but always this very trusted and reliable vehicle. So even as I was growing up and in high school, I was taking wholesaling courses and learning how to
Mm.
find deals. And so I went off to school, got my engineering degree in engineering management and information systems, but I had no interest really in being an engineer at somebody's firm or really going to work for anybody. I always had that rebellious nature of I really want to be my own boss, I want to control my schedule, and I want to own my results as well. So straight out of college, went into real estate, building my own portfolio, doing deals all across the Southeast, but primarily focused in Dallas, Fort Worth, and really doing whatever I could to make the most of whatever deal came across my plate, whether that was a contract assignment or some sort of creative financing, subject to deals, owner financing, a couple of fix and flips, really with the goal of, I think, much of your audience building recurring streams of income that would come in whether I woke up and decided to show up to work today or not. And that was the ultimate goal for me, was to build up an asset base that would fuel the dreams of the idyllic life that I think many
Hmm.
of us think of when we think of passive income without me needing to contribute active work. And that was really the goal and the purpose of being in real estate. And a couple of years ago, that all completely changed. And I'm sure we'll get into that part of the conversation as well.
100%. Beau, are you originally from Oregon?
I actually grew up in Alabama.
Okay. So let's talk a little bit about that. How did you end up in Oregon?
It was actually just I'll say an accident, but not really. I don't really believe in accidents per se. My wife and I, at the time, my girlfriend, were living in Texas. That was where I went to school. And we just had this burning to go optimize for quality of life. Dallas Fort Worth is very much a sprawling metropolitan area. Not a lot of hiking trails or places where you can go and just be outside and enjoy it year round. And so the West was calling us. And originally we had our eyes on Washington and actually just passed through Central Oregon, went skiing, fell in love with the place, didn't even have it on our radar. And once we got up to Washington, had our bags unpacked for about 15 minutes and decided, you know what, this isn't the place. Let's go back to Oregon.
That's awesome. That's awesome. Is that where you started really kind of forging a path in real estate and real estate investing? Was it in Oregon?
So when we moved to Oregon was actually me divesting from real estate. So
Oh,
as of
okay.
today, I don't actually own any real estate anymore. I'm fully in the Bitcoin space, and I guess you could say that I own some real estate through our data centers, our mining facilities. But the move out of Texas around 2021 was that kind of aha moment. This is no longer what I feel passionate about doing. This is no longer where I see the most promise. So as we had that opening and change in scenery where we're calling home, I also had this, you know, definitely a come to Jesus moment of, well, if we're not going to be where any of our properties are, I know what happens when you're several states away from properties. They don't get managed nearly as well as they should be. And so decided to start liquidating the portfolio. And as of last year, sold the last remaining property that we had in the Southeast.
Bo, what was the spark for that? What was the idea? How did that come about, right? Obviously, you'd been spent a lot of time in real estate and then something happened. What happened?
So I can credit it to a few years of exposure to Bitcoin prior to this 2020, 2021 period where it was really coming to the forefront. I had a few years to own it, understand it, and build familiarity where when Michael Saylor was coming on the podcast scene and
Sure.
talking about how he was thinking about Bitcoin from a corporate treasury perspective, it really landed for me that this was not just a speculative investment. This was becoming a global asset class that even, S&P 500 qualified companies would consider as a treasury. But it fit a different space in my mind than just high upside, high risk. And it led me to do a lot more study on what is this asset? Where does it fit in the context of where people store wealth? And how does it compare to what I was currently treating as, 95% of my strategy, which was real estate? And what I found was that it technically was very sound. It was a very sound monetary system. I couldn't really find any way that it technically could be impacted. I saw a lot of barriers in bureaucracy, in policy, but mostly just in psychology and the way that the world was perceiving this, not so much in how it was designed or the way it was likely to play out. And at the time, it even today is less than 0.2% of global assets. It was even smaller at that point. I saw the upside for it to potentially become a global reserve asset. And that, in my mind, gave it, multiple 100x in terms of upside over a long run, that as long as those technical fundamentals didn't change, that I was looking at getting in on an asset class that would turn into a blossoming industry and not just be a speculative position, but really something that there are many businesses built on, many services built on, and that's what led me into mining.
Okay, let's go back a little bit. I remember, well, I'll tell everybody, I'm sure, has their Bitcoin story, right? Of like when it was $100. I'll give you my $100 Bitcoin story. Okay, when it was $100. I'm reading an article by Richard Branson, and Richard Branson in this article references Bitcoin. I've never heard of Bitcoin. And he said at some point we will accept Bitcoin, right, at Virgin. And he believed that at some point there would be a global, right, global money type of thing. And I remember I admire Richard Branson. I like Richard Branson. I was like, Richard Smart, I should probably go figure out how to buy, $1,000 worth of Bitcoin. It's like at $100. And as I started contemplating that idea, one of the exchanges, and again, I didn't understand anything about Bitcoin. And by the way, I don't understand anything. I'm going to be like, I'm still a neophyte. Okay. But I just remember thinking the world is an interconnected world. And at some point, I think like value will be interconnected. That was kind of my thesis. Okay. And so I went to go buy this, and the exchange got hacked. 40 million, like before I bought anything, it was like $40 million like evaporated or when I went out the door, and I was like, oh, well, that's the end of this thing called Bitcoin. That thing's going to go away. And I ignored it from there on out. Okay. I ignored it. Fast forward probably around 2019. I think it was like 2018, 2019, 2020, somewhere around there. It was around when Michael Saylor started talking more about Bitcoin. And he said, think of the ability to be able to buy a block of Manhattan. And that's what one coin is. Like, what would it look like to be able to buy a block of this infinite space in Manhattan? And as a real estate guy, that spoke to me. I saw it. Like, I got that. Like, that analogy helped me. So I remember it had crashed down to like 32 or 33, and I remember buying my first coin right then, right? And um so that's what got me into this, right? And like learning a little bit more about this. But I have not, I'm not like you. I did not go all in. I did not sell all my assets. I still own a lot of real estate, right? But I've had conversations with friends of mine just saying, look at what this rate of return has been over the last decade. It is the best performing asset class out there. Yes, it's volatile. Yes, it's risky. Do your homework. Um, and you know, and I keep, you have to be careful who you kind of evangelize it to, right? Because it's just not quite accepted, right, by a lot of people. Um, but now you've got corporations that are just making this part of their reserve, and it's like that. This is something everybody really needs to be paying attention to. So I say that only because if I'd bought that $1,000 with the Bitcoin at $100, right, I'm like, oh my God, I just whatever, right? That's the regret. Um, but my original thinking and thesis around it, super elementary, was like I'd like to say, hey, it was kind of on. It would have been really really early, right? Um, but I want to understand how somebody like you decides to literally divest of every real estate asset you have, and you're like, I'm gonna go into Bitcoin mining, and like, why don't we just break down what is Bitcoin mining for people that are listening right now?
Yeah, absolutely. The simplest way that I could describe Bitcoin mining, it's like any manufacturing process. You're taking a raw input and turning it into a finished product. In this case, the raw input is energy. You're running it through a manufacturing process, ordering some computing power through a computer, and at the end of it, you get Bitcoin, which is your finished product. And the more efficiently and at the lowest cost that you can produce that good, the more profit you make as a miner. So the reason that people get into mining is one, it's an income stream. So it's a Bitcoin denominated income stream. That's why I personally really latched onto it was I didn't want to just sell my real estate for Bitcoin because it's not an income producing asset unless you lend it out to somebody, in which case you're taking on quite a bit of risk. And so mining was the only way that I could see to create a Bitcoin denominated income stream that also, like real estate, lives in the physical world. So these facilities, the data centers, the miners themselves, they carry a lot of the same characteristics as a real estate investment. You've got a depreciating asset that gives you offsets against your income. If you structure it properly, it's not just an income vehicle and an asset appreciation vehicle, but also a way to minimize your tax burden.
Mm,
So that
mm,
was the calling to me. I also saw that starting in 2020, there started to be a decreasing supply of available Bitcoin on exchanges. So most people go and purchase their coins somewhere like Coinbase or Kraken, one of these aggregators of liquidity. And what I saw in the charts was the peak of available coins was around 2020. And then the trend started to reverse. Early years of Bitcoin network launched in 2009, all the way to 2020, there was this increasing balance of available Bitcoin for people to buy. And if you look at the chart from 2020 up to now in 2025, that balance has continued to go down from a peak
mm.
of around 4 million coins to now under 2 million coins liquid and
Wow,
available.
wow.
Mining was the only way that I saw that you could actually get your hands on Bitcoin after this, whatever this inflection point would be, where everybody rushed to the exits and wanted to get as much Bitcoin as possible. Miners would be the last possible producer to not just have an income stream, but actually have sovereign access to the new Bitcoin that's being minted on the network.
How does like you made it sound like it's you actually make active income from mining Bitcoin? Like, help me understand that. Like this is you actually make money on this day. Like I always just see it as a store of value, right? So help me understand how the mining of it. You get paid to mine it. Like, do you get a piece of like? Help me understand that. I don't know that.
Yeah, so the way the mining process works is the best analogy that I've come up with, the miners are both the network security as well as the means of processing transactions. So you can think of it as a mix between the military, keeping the network secure, keeping this asset base secure, and something like Visa, where they're taking a cut of processing
Transaction.
transactions.
Got it.
So the miners in this process of throwing computing power at the network are essentially getting compensated in Bitcoin to both provide security as well as the means of processing these transactions. And it's just through an encryption algorithm called SHA-256, which, without getting too complicated, is basically trillions and trillions of guesses every second from computers around the world trying to find a random number in basically a lottery system that every 10 minutes outputs a Bitcoin reward if you've got that correct lottery number. And that just keeps on repeating forever into the future. And miners get both the Bitcoin, when you think of mining, it's like you're mining a finite resource, which is true. Bitcoiners are mining the new Bitcoin all the way up to that 21 million supply cap where there will be no more new Bitcoin issued. But they're also getting paid in another way that most people don't understand, which is they're getting paid transaction fees. If I'm sending you Bitcoin or you're sending me Bitcoin or anybody's moving Bitcoin on the network, they're paying a fee to move that coin, and that fee goes to the miners. So even after that last Bitcoin gets mined, miners actually are self-sustaining just by naturally supporting the network. So there's no end to mining per se.
How do they decide who gets paid what, right? Is this like everybody gets an equal share, which I doubt, right? Um, is it per transaction that you validate, or help me understand how do they decide how much you're going to get paid?
So on the network itself, about every 10 minutes, there's one block. And that block has a reward of Bitcoin associated with it. Right now, it's just over 3 Bitcoin, plus whatever the transactions fees will be for that block. Every block is going to have a few thousand transactions in it. So you're just getting paid to aggregate all of those transactions in one block. And so one computer is what actually finds that block. But in practice, most people are pooling together. So if you think of it, I like the lottery analogy because most people have some familiarity with how a lottery works.
Sure.
One person or one computer gets that correct number, but economically and probabilistically, it's very unlikely for you to reliably get that number with millions of other competing computers on the network. So in practice, people pool together and actually combine their computing power. One machine will actually find that random number and win the block. And then the rewards are distributed among that pool equal to the amount of work that you contributed. And at this moment, there's something like 20 or 30 pools that are all going at it. They win a certain amount of times per day, and miners get paid a proportion of the rewards that that pool actually wins. But in the early days, you could literally win a block yourself mining on like your laptop that we're both speaking to each other on right now.
Wow. If you could, Bo, well, did you have to go find a pool? Did you have to decide like I would, because you said there's 20 pools, right? Practically speaking, that you're like, I'm gonna be part of this pool, and is it like a club? And it's like a gang, it's like a group. Like, what is that like? Help me understand that.
Yeah, without getting too technical, every pool has a different way of aggregating and then deciding how they do their payouts. So some of them are just exactly what you contribute in computing power, you're getting that share. Others have kind of like a ramp up and a ramp down period to discourage you from switching between pools depending on who's having the best luck. Others will kind of smooth out your returns and take a higher fee for giving you less variance in what you're earning. And some are just very raw. Like you're going straight at the network. Only when the pool makes money do you make money. And so there's all these different payout schemes. And when we're working with clients, we give them two options that we think are the most like they're going to solve 80% of cases, and we let people pick whatever they want, even if it's not within those two. But typically, between one of those two choices, you're going to have exactly what you're looking for, whether it's stability or exposure and upside.
Okay, so you just created another question for me. You said, the way we advise clients. So then help me unpack that, right? Are you advising clients, getting compensated to advise clients, raising capital from clients to do mining? Like how does all of that work?
Yeah, so our business model is essentially that we set up a data center. We're going after these sources of energy. We're setting up all the infrastructure and then managing these supply chains and procuring machines so that someone like you could actually just buy a computer from us that is totally managed and hands off. When it's done right, this is a passive income stream. But just like real estate, if you don't have a good property manager, it's anything but passive. If you don't have the resources set up to appropriately manage that. So this is a computer. It has parts, it has components, it's running 24/7, it's processing a lot of energy. And so things do happen with it. So our job is to make sure that you as the client have a totally seamless experience, that everything is properly maintained. You've got a high degree of uptime so that you are constantly mining Bitcoin as you sleep, and that it's a hands-off investment for you. But
That's so wild, brother. This is such a cool conversation because I just don't know anything about this side, right? So I can buy a computer for some price that's just going to mine Bitcoin 24/7, and you are the property manager of that computer, essentially,
that's exactly right.
right? And you're getting a property management fee. Is it kind of like how it equates to it a little bit?
Essentially, yeah. So you purchase the computer up front. That's one transaction, and then ongoing you've got operating expenses, right?
Sure.
These computers, a single computer is using about as much energy or more as a standard household. So you've got a monthly fee for that energy, but in our model that includes things like maintenance, spare parts, cleaning, everything that goes into making sure that it operates is baked into that flat fee. And then every bit of Bitcoin that you produce goes straight to your wallet and you pick what you want to do with it.
That's wild. So, it's like buying a little property, and obviously there's operating costs to that property. So you're going to be paying on the operating cost of that property, and there's a property manager that's taking care of my property, right? It's
Hmm.
like the same idea, the same concept, just a different energy form, a different
100%.
expression, just a different expression of how it's done. So my next question is, well, what does that look like, right? Like, what does it cost to buy a computer? What's the operating cost of the computer? What's like, help me understand what that looks like, Bo.
There's a few different models that we carry, and they go anywhere from about 6 to 10,000. So just for round numbers, we'll use the $10,000 machine. That's the highest efficiency, most output, going to be relevant for the longest into the future. And that machine carries an operating cost of about 225 a month. And then on that 225, you're producing top line revenues of about $500 in Bitcoin. So this is paid out as Bitcoin. You are actually receiving Bitcoin to your wallet. It's not getting turned into USD. In fact, for the advice that we give people, especially having been in this for years and having technicians who started mining years ago, is that if you can, it's really good to not sell any of your Bitcoin to pay for those operating costs.
Mhm.
Because what might be 225 bucks now in operating costs a couple of years from now could end up being
Sure.
2,000 or 5,000. So the more coin that you can hold on to, the better over the long term. But as of today, those economics
Yeah,
work
you're
out
really
to
really exchanging one type of money for another type, or one type of value for another type of value. You don't want to kill the value of the highest returned asset class. I get that, right? It's like take US dollars and convert it, right? Because it's just going to be so much better if you're doing that because one is deflationary. Um, okay, that's fascinating. So it's roughly the operating cost is roughly around 50%, similar to like an STR, right? Similar to like almost like a multifamily property. I'm taking us all back to the thing in the language that we know, right? Hey, if I top line revenue $500, it's going to be like $250 to service that machine on a monthly basis. And I know that the machine is going to cost me somewhere between six to $10,000, so I can figure out what my cash on cash return is on that, right? Well, damn, like one is $6,000. Like, let's say you get the $10,000 machine, you're making $6,000. My question is, how long do those machines last? A year, 2 years, 3 years?
they're
Like,
typically lasting. So I like to break this into two different areas. There's the economic lifespan and the physical lifespan. So the machine itself can last and run for anywhere from 6 to 10 years if it's really well cared for. Usually around the 4 to 6 year mark, you're looking at upgrading to something that's more efficient because these things are getting better all the time,
sure.
albeit more slowly now than they were in the early days when there was a huge efficiency improvement to be had. So you're usually looking at doing a replacement at around that 5 year mark. So just based on rough numbers, if you're getting the most efficient machine and price stays flat, you're looking at a return of capital within 2 to 3 years. You've got a couple years to let that ride. And then if Bitcoin surprises to the upside, then those returns get a little bit exacerbated.
Yeah, and I imagine that, let's say I did buy a $10,000 machine and I could depreciate that machine, I would imagine, right? Because that machine is just depreciating, so I could depreciate that on my tax return. Is that
So
possible?
you've identified exactly why, especially our very high net worth investors look at mining as opposed to just buying Bitcoin,
Hmm.
is because this gives you a lever in the physical world to actually write off depreciation. You've got operating expenses. It's like buying a business in a box, which gives you much more in terms of levers to pull against your taxable income than just buying an intangible asset like
Totally
Bitcoin.
get it. Totally get it. It's a business, right? You're buying a business and there's going to be some tax advantages to buying that little business. Why don't more people do this? What are the
There's a
risks?
few,
What are the
yeah.
risks there, Bo?
One thing is, I mean, Bitcoin, if assuming that you like Bitcoin, Bitcoin is such an amazing asset because it is this non-physical, counterparty free asset where if you properly custody it, I mean, there's, as you said, exchanges have blown up, individuals have blown up, companies have blown up, but Bitcoin itself has never blown up. And when you properly hold it in self custody, it's as close to a counterparty free asset as you can get, meaning that there's very little risk to that ever being destroyed or taken from you. And when you get into mining, my early stories in mining were you're getting into the realm of trust in people and trust in operations. So my first venture into mining, I took $500,000 of my real estate earnings and put them into servers that I sent to a host in Georgia, and that deal completely blew up. I mean, nothing was maintained well. I didn't have the uptime I was expecting, tons of lost income, repair bills that were way more than anything that I had earned to date with the host. So, for the promise of more upside than if you just bought Bitcoin and those tax advantages of owning physical equipment, you're also taking on risk. So when you take on that risk, I say the most important thing that you can do is pick the right partner, because if you don't, nothing else matters. But
Sure.
you've got
Like
to
in
be
all
able to,
things.
yeah, exactly. It's
Yeah.
no different in any other
No
industry.
different than a development project, a fix and flip project, your spouse, right? It's like you gotta pick them right. Okay.
So we built the company to be the partner that we wished that we'd had when we started. But ultimately, if you're looking at getting into this, that I would say is your most important choice if you're not going to go out and build your own facility and do this whole process yourself. Picking the right person or the right group of people to align with is paramount. And otherwise, if you can't get the right person, I would just buy Bitcoin and sit on it. Don't take the risk.
Bo, did you guys build your own facility?
We
Like, what
did.
does that look like? Okay. And I saw something with hydropower, so like in your bio. So let's now let's pivot there. What does that look
So
like?
these are effectively data centers. They look a little bit different than probably what most people think of when they think of data centers. They're
Dude,
typically,
I'm in Loudoun County, which is like Fairfax, Loudoun County, which is like the data center capital of the world right now. So many data centers being built.
yeah. And so what's interesting about where you live as well, and this is an even deeper conversation, but these are basically just data centers. They're using a bunch of energy, they're connected to networking, and the reason that a Bitcoin mining facility or Bitcoin mining data center is different than those that are around Northern Virginia is that we're actually totally interruptible. So part of the reason I've seen these reports that, residential electricity rates near data centers actually tend to go up. Residential electricity rates when Bitcoin miners come in actually usually go down because Bitcoin miners have this very unique energy consumption profile where we can actually be turned off whenever energy is too expensive. And that means that the communities that have Bitcoin mines actually have this lever that they can pull to not pay for the most expensive energy in the year, which gives them the ability to actually lower their costs for their residents. So that's one of these interesting ways in which Bitcoin mining is different than, say, like a Google or a Meta facility that needs 100% uptime, absolutely cannot interrupt or cut off their power consumption. because part of their service level, if you think of using a service like Netflix, you can't have Netflix on 98% of the time.
Yeah.
That leaves hundreds of hours where people are just banging down your door, absolutely furious that their service isn't working. Well, Bitcoin miners have a different optimization criteria. We're looking for returns. We're looking for lowest energy costs possible because that is your main input and that determines how much money you make. So if you can actually be down a little bit of the time but lower your input costs, your operating costs commensurately, it gives you a lot of flexibility, it gives you higher returns, and you can actually be a benefit to your community, which is very counter to how most people think of Bitcoin mines taking all the available energy and, just being this extractive industry. It's actually, and this is far, far down the rabbit hole, in my opinion, one of the best sustainability tools that we have as we navigate an energy transition is Bitcoin mining facilities. They have all of these benefits to local energy grids that most people are not aware of. And it's part of what I spend most of my time explaining and educating about is that we really can be Bitcoin miners for impact and go in and change the fortunes of communities, optimize their energy procurement, and even use our waste heat to grow fresh food in climates that usually are too cold in the winter to grow that food. So it's this very holistic impact vehicle.
So let's talk a little bit about this. I've got this idealistic 23-year-old who's like all big business is evil, Bitcoin is evil, right? Amazon's evil, Starbucks is I'm like, yeah, but you enjoy Amazon and Starbucks and Netflix and okay, but yeah, I get it. I understand what you're saying. But she's like, do you know how much energy Bitcoin I'm like, no, I don't know. Like she's a smart kid, right? I can't argue against her half the time because she's just more researched than I am. So give me a compelling argument, Beau, that I can then take back and be like, well, here's what you don't know about this. You already gave me some of it. It sounds like, hey, uh, you can actually reduce the overall cost of what it costs you to run these mines because as the cost of electricity comes down, you guys can be opportunistic in the mining of that. But it sounds like you can grow food from the heat exchange that's there. Like there's all these other holistic, like you said, benefits. That's wild. And by the way, while you answer that, what do one of these mines even look like? Is it like a dude and he's got like servers in his back of his house? Is it like a help me understand what that even looks like, right?
So they can take a lot of forms. They can look very much like the data centers that people are familiar with. They can look like a shipping container. They can look like a shed in the back of someone's house. One of the benefits and the cool parts about mining facilities is that they can take many forms. They're very scalable. And so it means that you can fit them into these very unique contexts. And we have sites that are half a megawatt. We have sites that we're building that are 20 megawatts. And there are sites that are thousands of megawatts in the world. It just depends on the context of where you're building and what's useful for that community. But to your point about energy, this was something that I only within the last few years came to myself because most of us don't spend that much time studying how energy works, how energy systems work. The reality is there's more than enough energy and we just don't put to use what's available in the right way. And I think most of us have this sense that actually there isn't enough available energy, which is just not true. If you were to stack up the largest blocks of energy in the world, at the top would be the energy that the US consumes. Number two would be the energy that China consumes. And then number three is the wasted energy from the US, of what we generate but do not actually use. So miners actually go into primarily sources of wasted or curtailed energy that otherwise doesn't get used because we're looking for the lowest price. Typically, you'll pay the lowest price for something that somebody doesn't want or can't use. And so if all we did was make better use of the existing resources we had, we would actually have a lower cost of living throughout the world. And energy, if you're not aware, is the input to almost every finished product that we use in the world. I mean, from our phones to desks to anything that ever gets transported on a truck, the cost of energy is an input cost. And so if you can have an impact on that cost of energy, you actually lower the cost of living for everybody that energy will ever benefit. And that's exactly what mining is here to do. is to make better use of what we're already producing so that we can go out and produce more and continue that positive flywheel effect. In renewable energy development, for example, there's all of these wind farms and solar fields that often get developed but are not utilized to capacity. There's no market for their energy. They have to be subsidized in order for them to make any sense. And so if all you did was plug in mining at the site of generation and use the energy that nobody else used, you would actually finance the ability to continue to build more and more of every type of energy project and continue to accelerate this transition. And this is, this podcast is full of rabbit holes that we can't appropriately explore,
I
but this is
know,
one of
no,
the biggest ones.
there's that's interesting. Okay. I'm going to give you like a scenario, and I want to know how your brain would think about it. I have an STR, short-term rental. You know what that is. It sits on the Shenandoah River, beautiful little property, on 32 acres. The 32 acres are almost like a liability because it's so expensive to keep up the land of the STR, right? If it only sat on, let's say, a half an acre or an acre, that'd be great. So we've been thinking, like, how do we there's lots of different ways we can look at that asset, right? The additional, let's just say 30 acres that are there. Okay, you could go through a development project to try to put other STRs on there, but there's all these restrictions and there's wastewater management and like it's expensive to kind of build out that infrastructure. There's an area that's been cleared because there was an easement. I'm sure you've seen like those big power line easements that go through, right? And you could see at the very end, like you could see the big production power plant, like in the distance, right? So you've got this one section that's heavily wooded. You'd never be able to see any power lines. You got the section where the STR is. Never see anything there because there's all wooded and it's by the river. But there's this section, right, that kind of goes through the middle of the land. Not quite the middle, but like three-quarters of the land. And I've often thought, could we build like solar panels on this thing that's there? And what could we use that for, right? And so now, but I'm gonna tap into your creative mind. Is that something where I could do solar power and then have my own mining station, right? At some point? Or is that like, Rob, don't even go down that rabbit hole. It's easier I know it's easier. Just buy a computer for me, $10,000, right? And that'll be that's a hell of a lot easier. But I'm just out of curiosity, if you had 30 plus acres like that, what would be your thoughts?
So the short answer and the honest answer and self-serving answer is yes, you should just buy a computer for me and have it totally maintained for you.
Yeah, yeah, that
But
makes sense. Yeah,
because your question is so perfect for the rabbit hole that I didn't take you down, that I'm gonna explore it for a second.
awesome.
If you have this goes deep into how energy systems are built. Our capacity for delivering energy to places around the country and around the world is typically constrained by transmission lines. What you were just describing as having this easement for lines going across your property, that is usually the method for how we're conveying energy across very wide distances. So think hundreds of miles.
Mhm.
It is built for a certain capacity, and that capacity is typically the constraint in us being able to move energy. And so that power plant that you were mentioning, that transmission line is probably sized for that power plant. And if you were to, say, build solar and try to sell that energy onto the grid, even though you're helping with energy availability, there's actually not enough space on that line for you to get your energy to market. So think of it like traffic on a highway. There's only
Yeah,
so many
just
cars that you can get through at a time, and if you try to oversaturate it, you can't move it. You're straining the lines. So what's cool about Bitcoin mining is that you could build that solar field and you could, say, hook up some batteries so that you've got storage on site. And you could actually mine on your property, monetize your energy. And what usually would happen for other energy developers is if they have a project like this and it's over a certain size, they have to wait anywhere from 5 to 7 years to get that energy into the market. And that wait time alone kills a huge amount of deals that otherwise would make energy more available and cheaper for consumers because there's just not enough space on that highway for that energy to be delivered. And so the generation doesn't really get built. But if you, solar developer, have the ability to make money on that energy that you're producing for that gap of 5 to 7 years while you wait for an interconnection, while you wait for more transmission capacity, you just bridge the gap between energy generation and transmission. You got your energy to market, you made money all the way through, and you actually aided in making energy cheaper for everybody else because now you're supplying a new asset. There's more supply to balance out the amount of demand. And voila, over the course of years, you actually enable the energy transition, an abundant energy future. And it was partly because you had a way to make money from that energy you were generating in a flexible way on site that didn't need fiber optic, that didn't need anything but a Starlink connection and some electrons.
So, do you see yourself then as really in the energy business as opposed to the Bitcoin business? Is that how you see yourself? Or like how do you see yourself? I'm curious. How would you describe like what you do? Because like when I think about it, what you just said is, listen, I'm in the business where I'm creating a better sustainable future um by looking at energy differently than how it's been done. I'm curious. How do you see yourself?
You said something to me off camera that money is really just energy.
Mm-hmm.
And Bitcoin is the perfect embodiment of money as energy. And so I am a Bitcoiner. I am deeply embedded in reinventing the financial system through what we do. But since it has this direct link to our energy systems, I am also in the energy business. And it operates in the physical world on properties. So still, even though I, made every effort to get out of the real estate business, I am still in the real estate business as
Wow,
well.
that's wild. That's cool. It's like the best of both worlds, right?
But this gives a vehicle, and this is part of why I get so passionate about this, is it's not just a way of building wealth and creating income streams. Because of where this sits at the intersection of data centers and energy and the reinvention of a financial system, you get this very unique lens of, in my opinion, the most important super trends that impact the entire investing world. So just like, people talk about Bitcoin as being a Trojan horse for the financial system, I see Bitcoin mining as sort of a Trojan horse for teaching investors about the most important trends in the investing landscape, even though they're probably not expecting that when they first think about buying a server.
Yeah, I get that. I get that. I understand that. It's like get in the game so that you can understand what the game of the future is really about. It reminds me of when the internet started becoming commercial. This was 1997. Obviously, there'd been an internet been around for a while, but my business partner and I were right out of college. We decided to start this recruiting business. And I'm like, there's this thing called a website, and we need to get a website. And he's like, it's just a fad. It's like, we don't need a website, right? And I'm like, no, I think we need a website. And it was crazy, right? Just like the evolution of us putting on our first web page and the site and how long it took to download, right? Just how terrible it was to like what we have today, right? It's just fascinating. But if we weren't in on that early, we wouldn't have understood all the business that we've built, since then. And we're still young and dumb. We're still young and dumb, and we're still young and dumb now, right?
That's a great analogy for where we sit today, I think, because like you said, 97, most people weren't using the internet every day of their lives, but it had still been around for more than a decade at that point. And we're in exactly the same spot with Bitcoin. It's
I
been
mean,
around now 15 years, but we're barely at penetration. I mean, it's still so early in consumer use cases, people building businesses on it, people building services on it. It's not just Bitcoin, it's this whole layer of the new infrastructure of the internet, as we were talking about, the infrastructure of energy systems, financial systems, that still you're very early in seeing the impacts of, even though it's a few years old. And some people think, well, it's already had millions of percent return.
Yeah, they're
I
like, I
missed the boat.
missed it. Like miners, like there's less to mine. Like mine, I'm sure there's miners like I remember when. So much harder now. Um, how many coins are left to mine?
We're at about 19.8 out of 21 million.
Okay,
So right around 5%. And of that 5%, four of it will come in the next 10 years.
okay.
So
So,
this is
Bo,
digital gold rush time for sure.
yeah, I was gonna ask you when you think about that, like you're saying, listen, I've got 10 years, right? I've got 5 years. I got like how are you thinking about what your future looks like over the next 5 to 10 years? Like what is your plan, right? What's that look like?
So over the short term, we'll call the short term 5 to 10 years. Over the short term, this is a very high growth industry with outsized returns, even premium returns on top of what Bitcoin already makes, which is pretty high compound annual growth rate. After that period, it's not like it doesn't become viable. You just see, just like companies that were in the early stage tech sphere, Facebook, Apple, Google, like these very dominant networks had extremely high growth rates for the years that they were gaining market share. And then as they grew, they became much more like utilities or like monopolies that are still extremely profitable. They've obviously got a moat and they're going to make money as far into the future as we can see, but they're not doing these multiples over very short periods of time. So in the short term, high growth, gaining market share, huge growing industry. Over the long term, this looks much more like the utility structure where you've got a basic fundamental foundational service that you're providing that produces strong returns, but not like those early years where people were still getting their heads around it. Most of the capital had not found it yet.
Okay, Bo, I'm gonna put you on the spot. I'm gonna put you on the spot on your prediction, right? I'm when I'm going down the rabbit hole and I'm watching Sailor and I'm watching what's that he looks like he's 12 years old that just started the reserve thing. You know who I'm talking about.
Oh, Jack Mallers?
Jack,
Yeah,
Jack, right?
he's
Like,
great. Oh
dude,
man,
he's
he's so good.
awesome. I think he's awesome. I remember the first time I heard him, like, this kid is so smart. And he's so 100% passionate and all in, right? So listening to Jack, you know, where do you think this is in the next 5 years, right? You see all sorts of crazy predictions, but the math is math, right? So what does the math tell you a Bitcoin will be worth 5 years from now, 10 years from now? Or what are you thinking? You're like, hey, this is because you probably have some stuff. Some look at you, you're like, I'm scared to even say what number that is in my head, right? I can read your brain. But the truth is, like, you've gone all in, so you have a thesis of where this is going. Whether you're going to be right or wrong, it's your opinion, right? You're not making any kind of advice or giving anything like that. It's just like, I think this is where it's going to get to. I've banked my career and life on it. What's that?
So when we talk about predictions, to me it's about time horizon. And I have no crystal ball on what happens over any short period of time, like call it less than 3 or 4 years. I think a reasonable 5 year prediction is around a million a coin.
Mm.
Could be more, could be less, but 10x over a few years is not uncommon for Bitcoin. And that would bring us just on par with the current market cap of gold,
Mm.
of which this is the most,
Which is
this is
just
the closest digital analog that we have to shiny store of value rock that most people appreciate as something like Bitcoin.
which
Over
yeah, which is this is so much better than gold in my
it's
humble.
we don't have to go into it. There's
Okay,
there's so many reasons that it's
of
better than
course,
gold, and the market's still figuring
psychology.
that out.
Yeah, yeah, yeah. It's like,
It's
hey, let me
it's better engineered gold for the 21st century.
100%. How am I going to move all the gold I have buried underneath my house quickly, like and efficiently? That there's no way, right?
So
Um,
if you think it's as good as gold, a million a coin in 5 years, if the market believes that, totally reasonable. Looking further into the future, I think this becomes a replacement for people storing value in things like real estate and treasuries, that we just don't have a good proxy for where we store our wealth over long periods of time. And there's so much manipulation and kind of manufacturing of returns in the financial system. I think we now have a perfectly engineered wealth storage asset to be a reserve asset for the world economy. And if something like that happens, real estate and bonds respectively are something like 30% of global wealth each. So if Bitcoin gets to like 20%, then that's, it's 10 million a coin. And I think that can happen over a couple decades.
I'm curious how you think about real estate and the blockchain. Meaning, do you believe that eventually it's not like, right now if I'm going to syndicate a deal, or if I'm going to buy something with my partners, we get an operating agreement, we work out whatever the shares are, you get 20%, I get 80%, whatever it is. Do you suspect that at some point in the future that will just all be done in the blockchain? It'd be like, hey, here's your 20%, like it's all marked in the blockchain. Here's my 80%. I could sell mine in the chain. Maybe I need to use Ether or something like that for it. I've talked to some friends of mine, and that are in the title space, and they said the problem is all of these title companies have kind of like a monopoly at the local level. It makes it very hard for that to transition to happen. But I just think it's probably the most efficient way to keep track of title in the future. I don't know. I would love to get your thoughts on that.
I do think it's a use case. You can, like, when I talk about this, my focus is just the total addressable market of money, which is the largest market in the world, is wealth storage. But this is a legitimate use case, and it's something that other things are being built for. Anything where you've got to keep a record of who owns what and when it happened, when that transfer of ownership happened, that currently just lives in some form of a database structure, and a blockchain is not really that much different than a standard database structure. So you can have that as a use case, and it can all just be a layer on top of the Bitcoin network. Actually, I've got a little ball that I play with, especially on calls like this. That's a company called Simple Proof,
Mm.
and what they do is they actually protect election results on the Bitcoin blockchain. So they're actually recording votes so that as they get escalated from, say, the municipal or county level up to these higher offices, that you have a record of what the results were at the lower levels at a certain point in time, and reduces the ability for elections to be falsified. And that company is called Simple Proof. They had their test case in a Guatemalan election a couple of years ago, went off without a hitch. Very interesting use case that, not directly related to property records, but very similar. You're
Yeah,
relying on this source of truth to tell people what happened, when it happened, and not give anybody the ability to go back and change it in the future because they wanted to try and rewrite history.
that's wild. That's awesome. That's cool to know. So how does somebody reach you, Bo, if they're interested in buying a computer, if they're interested in exploring this? Maybe you have a podcast, maybe you've got a website on Instagram. We'll certainly make sure that we connect you all here. But for those listening right now, what's the best way?
Yeah, absolutely, Rob. The easiest way, if people are just itching to get started working with us, is go to the website. That's abundantminds.com. You can book a call with a member of my team, and it's not a high pressure sales pitch. It's really just figuring out if this could be a fit for you and what that might look like. We have people from a single unit up to hundreds and multi-million dollar portfolios with us. So run the range, and everybody gets that one-on-one consulting, white glove treatment, everything that you're expecting if you're going to trust somebody with an asset like this. If you're looking to just get educated, we do make a lot of content. I would say YouTube is the widest variety, where you can get long form videos of me explaining different topics within Bitcoin and finance and Bitcoin mining. We do a lot of short form content, and we've got a podcast where we've had people in the Bitcoin space like Jeff Booth and Preston Pish, and we had Jack Dorsey on earlier this year.
Oh, wow.
So you can take that as a much more long form way of engaging with us. And all of those social accounts are just going to be at Abundant Minds.
Awesome. Well, Beau, thank you so much for spending some time with our community. I really appreciate it.
Thank you, Rob. It was a pleasure to be here and really enjoyed this.
Yeah, same here.